Hello again, everybody. This is John from Straight Path Financial, and this is the latest installment in our series of videos to show you how to enter all of your financial plan information into the Straight Path Financial professional online planning service. If you've been watching these videos in order, we've had an overview, you've filled out your profile and goals and assumptions, and then all the way through account and assets, home and real estate debts, and now we are on income. All right, so this is where you enter anything that you make, any income that you have. Think of income as money that comes from someone else, an employer, a business, an annuity, a pension, something like that. I would avoid putting income that you are getting from any investment account. So bond interest, dividends especially, that would be double counted if you enter it here because that should be captured in accounts and assets, especially if you followed our suggestion and linked those accounts so that they feed into your financial planning system. Okay, let's go ahead and get started. Just to give you an overview here, once you click on the income heading, there's work income, Social Security, passive income. This would be rentals, interest income. If you have a loan or if you loaned money to someone, something like that. Pensions, if you're lucky enough to have a pension, annuity income, and then windfalls. Windfalls, think of windfall as, the best example of a windfall is winning the lottery. You're not going to win the lottery, so don't put that into your financial plan. But an inheritance is another one where you inherit a large sum of money or any sum of money, and that comes all at once as a windfall. Another example there is selling a business. If you have something that you can sell and you're going to get a large amount of money at once, that would be a good place to put that into. Okay, so enough on that. Let's start at the top here. This is going to be where most of our income comes from as we enter this into our financial plan. So click on work. And again, this can be employment income or self-employment income. We are agnostic as to whether or not this is actually employment income versus self-employment, so it doesn't matter there. All right, so let's add a job. Click on the plus there, and I'm going to say a job. Let's say, okay, I'm just going to be very generic here, employment income. All right, and I make, say, I make a salary of 100,000. Oh, I'm sorry, not 100,000 monthly. Let's call it 10,000 monthly. Okay, and I'm able to do this starting now. So that's my age in the plan. I am going to, let's say, I'm going to make that until retirement age, and then I have my growth rate here. So this is my growth rate for my profile or for my assumptions. But let's say I'm going to be more optimistic just for this stream of income, and you can be specific on just this stream of income and say my employer has promised to give me 4% raises. If they renege on that, then maybe 2%. Okay. All right. So that is my income. I make 10,000 monthly starting now till I retire, and then these are my growth rates. Okay. Next is contributions. All right. So now I can tell the system whether or not I am making contributions to my retirement accounts from this income, and that will match into the 401k that I put here. Okay. So let's say contributions to retirement savings. Click on that. I contribute, let's say 6%. That will not increase each year. And my employer matches. Now you can do it this way, 50% up to 3%. Okay, so that means they match half of what I put in up to 3%. All right, click next. Goes into my 401k, which I've already entered, so you can link that there, save that. And now I have not only do I have my income here, but I also have what I'm putting into my 401k every year, which is great. All right. So it all feeds into it very naturally, which is nice. If you have a spouse, then you would add your spouse's income if they have one. If you have business income, you can put that all in here under work. Okay. Just a little best practice here. Here's kind of a list of a guide to help you through this system. But if you click on this link right here, are you expecting a work bonus? It's a nice little video from New Retirement on how to enter a bonus. So a lot of people work for their salary and they get a bonus on top of that. This will show you, and we'll kind of walk you through how to enter your bonus. All right. Let's go to Social Security. So you can enter that here. Again, just to skip down here, these are the assumptions for the cost of living adjustments for Social Security. click on the pencil to edit Social Security, and let's just say, well, I'm expecting to get $2,000 a month. I hope it's actually more than that. But then that's at my age of 67. Okay, my full retirement age. There we go. Now, if you don't know where this is, you can again look this up here, click that link, and this will take you to the Social Security Administration website and you can look it up. I highly suggest you do that. It's good to be accurate here. If you're really young and trying to do this, it's probably not that big of a deal. You can just use an estimate, but always a good idea to know where you can look up your Social Security information, because that should be an automatic part, hopefully, of our retirement as all of us get older. Okay. Passive income, let's say you have a rental or you have something similar and you put in $1,000 a month. I'm getting this now. I'm going to keep that and hopefully have that for my lifetime. This could be, work in the Midwest and a lot of family farms and cash rent on crops and that kind of thing. So could be anything here, and you can specify that up here. All right, so let's save that. Pensions, I'm not going to have a pension, so we can leave that out for me. But if you have one, if you're lucky enough to do that, you can do it both ways. You can do a monthly or you can do a lump sum. This is actually a pretty good tool to use. If you have the choice of these two, you can model that and see if it would be better for you to take the monthly amount or the lump sum amount. Great tool for that. Just to keep going down the list here. Oops, sorry about that. Annuities is going to be similar to pension. So this would be from an insurance company. You can start there if you have an annuity of some kind. And then let's do a windfall. All right. Click on yes here. Well, I only have one account entered. Actually, let's call this a retirement bonus. Some companies pay bonuses or a bonus into their qualified plan, like a 401k. So we'll call that this. And let's say I'm going to get $25,000 when I retire. And I can plug that in there. All right. So now I have a windfall. Good place to put inheritance. Basically, any amount of money that you might get one time, you can put that there. Okay. So there is a quick view of how to enter any income that you might have as part of your financial plan. Questions, let us know. If you need some guidance, schedule a time to talk to us on the straightpathfinancial.com website, and we look forward to talking to you soon. Thank you.